It's Wednesday. Thanks for joining me. We'll have a look at the Forex markets, gold, and the US stock market. Some really interesting developments at last. We've got some breakouts and we've got some tradable patterns. Euro US dollar chart. We have a double top pattern. What's key now is the support level around the 109.5 area. We've got on the 4-hour chart a trend line going back about 5 weeks. You can see that black trend line. We've got the 100 period moving average coming in at around the same value, around 109.5. That's the blue line. We've got the 23.6% fib at 109.43. So there is a lot going on at the 109.5 area. Now that's a good support level. It might be worth trying along. The double top pattern may not play out. We may just develop a new sideways range from around 109.5 up to 110.5. I hope we don't, because I don't really want to sit there trading a 100 pip range. But if we then start breaking below 109.30, I would take that as a sell signal. I would take that as confirmation that the double top pattern is going to play out, and we're going to sink as far as 108.70, 108.60, maybe even 108.00, 107.90. That would be a little bit more exciting. I'm going to show you another double top in a minute on Forex markets, but another really interesting development. I've been waiting for this for quite a long time. The Aussie dollar, I've blown it up on my chart here for you. Goes back to the beginning of March. So it's nearly 2 months old. It was a horrible, choppy, volatile sideways channel with really very little opportunity for low risk trades. I've had to now wait for a breakout. We did try along at the lower end of the trend line around the 66.5 area. Why would you not do that? It could easily have bounced off there. We had a 20 pip stop. So we're out of that low risk trade, and it doesn't look like we've broken to the downside. So we've got resistance around the 66.5 area today on any bounce. It does look like the Aussie dollar should start to sink in the days ahead. You've got targets and all the information in the analysis and on the trade ideas spreadsheet. Got another double top to show you a really tradable pattern. In the meantime, I just talked about my trade ideas spreadsheet. This is something that all my subscribers get every morning, along with a written analysis of about 25 different markets. This trade sheet is the thing that everyone values. I know a lot of you subscribers don't really even need to read the analysis. You just go straight to the trade ideas spreadsheet. You input the orders that I've given you, the pending orders. You leave them resting in your order book and you go off and wait for them to be executed during the day. You've got your stop, you've got your target. So it really is just a very simple way of trading without sitting in front of the screen all day. The euro yen has a potential double top pattern on the weekly chart. Looking at the daily chart, to me, this is a really good confirmation. In October, we had the first peak with a red-bodied candle. The market then traded sideways. Eventually, it reversed. And in the end, we did sink a total of over 10 points from that October peak. We've now rallied back. Yesterday, as you can see, we've got this big bullish engulfing candle. In the morning, the bulls were happy. We were making a new high. But then suddenly, without any warning whatsoever, euro yen turned around and collapsed. We took out price action for the last six days. So there are a lot of bulls who are trapped in losing positions. This bull trap, I think, will lead to further losses. And if we get any bounce today, it could be worth trying a short position with a stop above yesterday's high. Where can we sink to? Well, the 145, 144.5 area certainly looks reasonable. I wouldn't be surprised to see the 200 and the 100-day moving averages tested around the 143.00, 142.50 area. Let's see if that plays out. We've had 2 nice trades in gold and silver this week. We bought gold on Monday, saw a nice bounce from the low 1980 area. I'm quite pleased with that because we're stuck in this horrible sideways range. And as you know, I don't like trading sideways ranges. So if I actually pick a winning trade, I feel quite proud of myself. We did the same with silver yesterday, buying it down around the 24.70, 24.60 area. Nice bounce above $25 today. Now, gold does appear to have a lower trend line support around the 1975, 1970 area. That has been working. We've got resistance in the $2,000 to $2,005 area. So a break above 2005 could be a buy signal. US stock markets have also been in a bull trend, but I did talk about them potentially reversing last week, and it does look like that is playing out. I did warn you that the S&P was hitting a strong resistance level at 42.00, 42.10. I've talked about that level for weeks. It has been my target for weeks. It's been my sell level for weeks. If you're short there, you're looking good. You're up about 100 points so far. The descending triangle I pointed out to you yesterday, if you're a subscriber, I pointed out to you about the moving average crossover and how those moving averages and the shorter term trend line were acting as a resistance level. So if you got into a short position yesterday in my 41.50, 41.60 area, that was a beauty. That was the high. We tumbled about 60 points at one stage during the day. We've broken the 500-hour moving average. We've broken this lower trend line. We even broke the 23.6% fib at 41.06. So it's all looking quite negative for the S&P. You've got the trade levels on your trade sheet today, but certainly does look like stock markets are moving lower. NASDAQ also broke out of its sideways range to the downside, and the Dow Jones is finally respecting that 4-month trend line that I've had in my report for a number of days and moving to the downside. Okay, that's it for today. Hope that's helpful. If you've got any comments or questions, put them in the box below. I'll get back to you as quickly as possible. Give me a thumbs up, give me a like, and make sure you've got that notification bell ready for my next video. Thanks very much.